Vietnam's remarkable economic rise is often credited to its government, particularly the Doi Moi reforms that shifted the country toward a market-based economy. These changes paved the way for private enterprise and foreign investment, propelling Vietnam to become one of Asia's fastest-growing economies. While South Korea, Japan, and Singapore are among the largest foreign investors, the United States plays an unparalleled role in Vietnam's economic success. Surprisingly, despite not being the top investor, the U.S. stands out as Vietnam's most significant economic contributor. How? Through international trade. Foreign investments from countries like South Korea and Japan have undeniably contributed to Vietnam's growth. Companies such as Samsung and LG have established factories, infrastructure, and employment opportunities. However, these investments largely serve a purpose, using Vietnam as a manufacturing hub to export goods globally, especially to the United States. Without international trade, particularly with the U.S., these investments would be limited to Vietnam's domestic market, significantly capping their impact. The U.S. is one of the world's largest consumer markets, with consumer spending consistently growing year after year. Even during the COVID-19 pandemic, American consumer demand remained strong and rebounded quickly. This immense purchasing power benefits Vietnam, which exports billions of dollars worth of goods annually to the U.S. in 2024 alone. U.S. imports from Vietnam exceeded $124 billion. Unlike foreign direct investments, which accumulate over time, this figure represents yearly trade. For comparison, South Korea's total registered investment capital in Vietnam is around $78 billion, but that's a cumulative figure, not an annual contribution. This makes the U.S. the largest single economic contributor to Vietnam's economy. Vietnam's top exports to the U.S. include electronics, textiles, footwear, and machinery. Many of these products come from multinational corporations with factories in Vietnam, such as Samsung, LG, Nike, and Adidas. These companies rely on Vietnam for cost-effective production and then ship goods to the American market. The affordability and quality of Vietnamese-made products make them highly competitive globally, reinforcing Vietnam's position in international trade. Vietnam benefits from its trade relationship with the U.S. in multiple ways. Foreign exchange reserves. U.S. trade brings a steady influx of U.S. dollars, strengthening Vietnam's foreign currency reserves. Import capabilities. Vietnam uses these reserves to purchase raw materials, machinery, and technology from other countries like China, South Korea, and Japan, supporting its industrialization. Debt management. Many of Vietnam's external loans are denominated in U.S. dollars. A strong trade relationship ensures Vietnam can meet its debt obligations without economic strain. Several factors make Vietnam a top sourcing destination for U.S. imports. Bilateral trade agreements. The 2001 U.S.-Vietnam bilateral trade agreement marked a turning point, drastically increasing trade volumes. Within 4 years, U.S. imports from Vietnam jumped from $1 billion to over $6.6 billion. East Asian investments. South Korean and Japanese firms manufacture goods in Vietnam for export to the U.S., reinforcing trade ties. Currency advantage. The Vietnamese dong has consistently weakened against the U.S. dollar, making Vietnamese goods more affordable in the global market. This currency devaluation enhances Vietnam's export competitiveness, particularly in price-sensitive markets like footwear and apparel. Despite its strong trade relationship with the U.S., Vietnam faces potential risks. Former U.S. President Donald Trump has previously pushed for tariffs on imports from countries with large trade surpluses with the U.S., including Vietnam. If similar policies were reintroduced, they could disrupt Vietnam's exports, affecting its economic trajectory. A trade surplus occurs when a country exports more to another nation than it imports from it. Vietnam's trade surplus with the U.S. is significant, meaning any imposed tariffs could impact the country's economy. However, even with these risks, the U.S. is expected to remain Vietnam's largest export market. While foreign investments from countries like South Korea, Japan, and Singapore play a role in Vietnam's growth, the real driving force is trade with the United States. As the largest consumer market for Vietnamese goods, the U.S. contributes substantially to Vietnam's economy, bringing in billions of dollars annually, fueling job creation, industrialization, and foreign exchange reserves. Despite potential challenges, the U.S.-Vietnam trade relationship remains one of the most crucial economic partnerships shaping Vietnam's future.